Right, the hour of 9:30 having arrived, we're going to get started here. Representative Freeman, Chair Freeman is on his way. I'm now calling the Joint House Housing and Community Development Committee and Local Government Committee's informational meeting to order. For everyone's information, this meeting is being recorded and utilizing Microsoft Teams software with remote members. Dina, will you please call the roll call?
Chair Sturla.
Here.
Rep Abney. Rep Belmont. Rep Brown.
On leave.
Rep Cephas.
On leave.
Rep Donahue.
Here.
Rep Green.
Here.
Rep Kahn. Rep Brzezinski. Rep Madsen.
On leave.
Rep Powell. Rep Prost. Rep Siegel.
On leave.
Rep Smith-Waddell.
On leave.
Chair Irvin.
Here.
Rep Barton. Rep Cooper. Rep Gatus.
Leave.
Rep Jones.
Here.
Rep Kutz.
Leave.
Rep Kuzma. Rep McKenzie.
Here.
Rep Major. Rep Stender.
Leave.
Rep Twardzik.
Chair Freeman, having arrived, it's your turn.
Thank you, Mr. Chairman. I'd like to have Christina call the roll.
Sure. Chairman Freeman.
Here.
Representatives Borowski. Dorado. Donahue. Fleming.
Expected.
Here.
Oh, here he is.
Hambidge.
On leave.
Kazim.
I think she's expected later.
Madsen.
Also expected later.
Monroe.
On leave.
Virtual. I'm on virtual.
Oh, I'm sorry.
Okay.
There you are.
Probst. Prokopiak. Salisbury.
Leave.
Sappy. Smith-Waddell.
On leave.
Chairman James. Representatives Banta. Fink. Jones.
Here. Again.
Kuzma. Miller. Grader. Rigby. Rinkavage. Quattro. Wentling.
Since we only have 90 minutes, I want to recognize Jacob Fisher, Chair of the Pennsylvania Developers Council, for brief remarks, as they suggested that we hear from Alex Borowitz of the Pew Trust, Director of Housing Policy Institute today. Alex, you can start with your presentation after Jacob is done.
Thank you very much. Good morning. I want to thank Representatives Freeman. Sorry, can you? Here we go. I want to thank Representatives Freeman, James, Sturla, and Irvin for holding this joint hearing this morning, and thank you to all of you for attending. My name is Jacob Fisher. I'm Regional Vice President with Penrose. We are a national developer of affordable rental housing, and I'm also the chair of the Pennsylvania Developers Council. I'm joined this morning by several of my co-board members and members of our advocacy committee. The Developer Council includes over 70 organizations that do business with the Pennsylvania Housing Finance Agency and other state agencies to develop affordable housing throughout the Commonwealth. In partnership with PHFA, our members develop and preserve hundreds of units of affordable housing each year, utilizing the low-income housing tax credit as well as several state sources, including FAIR, Penn Homes, DCRP, and the state housing tax credit. Development of affordable rental housing has become even more difficult in recent years due to increases in cost of construction and the cost to operate our completed communities. Still, these developments would not be possible without PHFA and the legislature, which have provided important gap funding in recent years in the form of programs like CCRP and DCRP. The ARPA stimulus money that the legislature was able to dedicate to housing undoubtedly has helped move many hundreds of units and dozens of projects that were stalled due to funding gaps. The Developers Council's top priority for this session is to see the increase in the cap in the FAIR program. We're pleased to see that FAIR increase was included in the governor's budget and are hoping that the final legislation will increase FAIR to $100 million by 2028. This morning, we are so pleased to be with representatives from both parties, hailing from all corners of the Commonwealth. The Developers Council and its membership understand what everybody in this room understands, that the crunch on housing affordability affects people in urban, suburban, and rural areas, regardless of party affiliation. We also acknowledge that while funding is critical, that there are other things that the legislature can do to help reduce barriers to development. We are heartened to see legislation introduced this session to address issues related to housing affordability, including blighted properties, permitting, zoning reform, land banks, and inclusionary housing. Some recent examples include Representative Siegel's recently passed Economic Development and Mixed-Use Redevelopment of Shopping Malls Act and bills such as HB 1386, which defines attainable housing, HB 1976, which permits multifamily development in commercial zones, and Representative Freeman's HB 1207 to improve land banks. Despite this progress, our industry still faces significant challenges, including construction costs that likely will never return to pre-pandemic levels, permitting and regulatory hurdles, NIMBYism, antiquated and highly variable zoning regulations across the Commonwealth's 2,500 municipalities, and rapidly escalating operating costs, which are driven by record high insurance rates and utility costs. We hope to have opportunities to engage further with these two committees on these and other topics. But for today, we'd like to turn from challenges to potential solutions. One of the things that we're often asked is, what do they do in other states? And today, we have the opportunity to engage further with that line of questioning. We're pleased to have with us Alex Horowitz, the Project Director for the Pew Charitable Trust's Housing Policy Initiative. Alex's research at Pew focuses on how home financing, the housing shortage, and land use regulations affect household well-being. He also has conducted research on how small dollar loans and mortgages can make consumer banking safer and more accessible. Before Pew, Alex worked in media relations, baseball information, and communication for 2 Major League Baseball teams, neither of which was from Pennsylvania. It's my pleasure this morning to introduce Alex Horowitz.
Mr. Horowitz gets started. He has indicated that he will take questions during his testimony, but I would ask members, because we have such a limited time, to have it be a specific thing related to what he's talking about, not to start pontificating about some other theory that we might have personally or something like that. So with that, Mr. Horowitz.
Thanks so much. Thank you to the chairs. Thanks to the committees for having me here this morning. Pew's a nonpartisan, nonprofit organization that does work and research in the public interest. And I'm part of our housing policy initiative. So this is a team that works on issues that are affecting housing affordability, housing availability, financing housing, and the outcomes, because we're at a time that is different than any time that's come before with respect to housing. And I can go onto the first slide. But we see that for the first time, half of renters are spending 30% or more of income on rent. This has not happened before. And so housing costs are the biggest share of a household's budget typically. Housing is a third of the consumer price index. So this is a big piece of what consumers spend on. And HUD considers, the Department of Housing and Urban Development considers a household to be rent burdened, to be cost burdened, if they're spending more than 30% of income on housing. And this is the first time that this figure is the median. So with half of renters spending more than 30% of income on housing, it is no surprise that we're hearing about housing costs being a major strain on household budgets and taking up an increasing share of each paycheck. Now, 1/4 of renters are spending 50% or more of income on rent. Also, an all-time high. 50% or more of income on rent makes things very, very difficult. This especially affects lower income renters because their paychecks they're earning less, and so rent is just taking up a bigger share of each paycheck. Now, this is not historically normal. Both figures have doubled since 1960, but they've been increasing each year, and we see that historically, housing costs increase a bit slower than incomes. And that's part of why living standards rise, because our incomes are rising faster than our housing costs. And that has changed. So now we see housing costs rising sometimes faster than incomes and in line with them, faster than other elements of the consumer price index that make up how much people are spending. Part of what's going on is that even if our population were not growing, we would need more homes because household size has reached an all-time low. In the most recent census, American Community Survey conducted by the Census Bureau at 2.50, is the average household size. When a lot of our current zoning was initially adopted, zoning codes that have been amended since, in the first half of the 1900s, household size was closer to 4. And now we're at 2.50. So the same number of people in smaller households simply need more homes. And that explains why part of the demand is for smaller homes, because household sizes are smaller and people value living close to the places they go every day. Despite that, household size dropping, homes have been getting bigger until recently. And part of this is also driven by zoning codes, because if you're required to have a lot of land for each home, or apartments are restricted to only a small part of a community, or townhouses, which are traditional starter homes, are not allowed because of lot size minimums, then we're going to see houses get bigger, even while households themselves are getting smaller. Now in Pennsylvania, average household size is at 2.37. That's one of the lowest in the country, about fourth lowest. And part of what's going on here is that demographics drive household size, including age of the population, how many kids people are having, and living patterns, where they live. But we're really looking at demographic drivers here more than anything affecting household size. And in the US, 63% of households have 1 or 2 people in them. That is also an all-time high. But in Pennsylvania, the figure is even higher, at 66% of households that have 1 or 2 people in them. Nationally, even though we may envision thinking about housing as something for a large family, only 9% of us have 5 or more people in our household. And so our housing stock is a bit of a mismatch for the way that we're living. And this demographic trend is continuing each year, given the aging of the population and declining fertility rates. So the supply of homes in the US is near an all-time low. We're just seeing a bit of a rebound now, in part because mortgage rates are so high. But you probably know that this is a tough time to buy a home. And it's been a tough time to buy a home even when mortgage rates were low a few years ago, because the housing stock was simply so limited in terms of both homes to rent and homes to purchase. And when supply is low, then we see prices rise because it's a seller's market and there are just not a lot of options. And so we see bidding wars for the same homes. So what does this look like? You can see prices plotted against housing supply over time. And what realtors say is true. When there's not a lot out there, then sellers have the power. When there is a lot out there, then buyers have the power. And so even now, we do see parts of the country where there is more inventory. And so we see sellers cutting prices in those places. But in most of the country, supply is still really tight. And so we're not seeing price cuts, and instead we're still seeing bidding wars, even with mortgage rates over 7%. I think it's pretty well known how supply and demand work when you're a seller, when you're a buyer, because you probably bought or sold a home or know someone who has. Rents work just the same way. So the exact same dynamics are in place in rental markets that are in place in for sale markets. But where we use months of supply in for sale markets, we use occupancy rates in rental markets. So we see parts of the country where rental markets have gotten so tight that occupancy rates, 95% is usually considered full in a rental market. That's it favors the landlord because tenants don't have a lot of options when you hit 95%. We've seen places in the last few years hitting 96, 97, 98% full. That means tenants have very, very few options. If landlord raises rent, they don't have somewhere else to go. Now, there are markets where occupancy rates are lower, more historically normal in the low 90s. And in those places, we don't see rents rising. We see rents that are flat over time because tenants have options. If their landlord tries to raise their rent, they can push back because they've got somewhere else they can go. especially if new buildings are coming onto the market. So in Pennsylvania, housing shortage is widespread, as you know, affecting most regions of the state. This is true in cities, it's true in suburbs, it's true in rural areas. All three are suffering from a housing shortage because there simply hasn't been enough building going on. A lot of what's going on there is right now with interest rates high, we're going to see less building going on because of financing costs, but this was true even before interest rates started rising. And largely this is driven by restrictive zoning and other impediments to building, such as requiring lots of land for each home or restrictions on starter homes like townhouses or duplexes and multifamily housing as well.
Because the best way to make sure that I have rent control, if you will, or to make sure that costs of housing is affordable if I'm buying housing, is to make sure there's a slight oversupply as opposed to the shortage that we currently have.
Yes, that's exactly right. So when there's enough housing in a market, then we don't see costs rise quickly. Okay. The places where costs rise quickly are the places that don't have enough of it. We got, I didn't put this slide in because it was too many lines moving on the graphs, but during COVID, we got this sudden natural experiment where some regions saw big outflows of residents, especially cities and places where people were primarily for their job. Those places saw a big outflow of residents. Rents dropped. Some parts of the country saw a big inflow of residents. Rents soared. So it was in real time, over the exact same time period, some parts of the country seeing rents skyrocket while others are seeing them drop. And this is in response to population flows, because even though the supply can't change that quickly and didn't, demand changed very quickly. So we saw really sharp movements in rent driven by migration patterns that happened all at once, which is very unusual, but 2020 was an unusual time.
And so if I want to try and get in-migration into my state, which we do, I got to make sure there's an oversupply of housing or I'll never get the in-migration because they're migrating to a place that's got higher cost of housing.
That's right. So we're seeing housing costs drive migration patterns. Historically, the opportunity to earn was the foremost driver of migration patterns. People moved to where they could earn more. That has reversed. People are moving to where they can pay less for housing. California is seeing huge outmigration driven by housing costs. California used to see large in-migration driven by the opportunity to earn. So Pennsylvania, these are new homes per 10,000 population. You can see that new home construction is higher than it was coming out of the Great Recession, but still well below where it was in the 2000s. And so with less housing coming on the market, that explains why existing homes are getting bid up. Usually we don't see high income and low income households competing for the same homes because high income households can afford more, they can afford bigger homes, and they seek out high opportunity neighborhoods. And so we don't see households competing for the same homes. We're seeing a lot more of that now. And this explains a lot of it because not enough new housing is coming into the market. So we see residents who normally wouldn't be competing for the same homes, who earn very different amounts, competing for the same homes. And so a house that wasn't worth that much a decade ago or 2 decades ago is worth more now because the same house is getting bid up since there's not as much new construction coming into the market. That's true both for rentals and for homes to buy. So you can see Pennsylvania's housing inventory, and this is as of the spring, is less than half of what it was in 2018. So these are homes for sale. And you can see the dotted lines show you these numbers by market, but even though the ones at the bottom kind of cluster together, they all move in the same direction, where we're seeing less inventory now than we were in 2018. Unsurprisingly, home prices have shot up since the start of the pandemic. This is looking at the last 4 years, when median housing price in Pennsylvania was $194,000 statewide. in March of 2020, and now it's 261,000. And in areas that have seen more pressure, in influx of residents, then we're seeing then we're seeing larger increases. And you can see that rents are having the same experience. So median rent was $979 statewide at the start of 2017, and as of this January, $1,257. So that's a 28% increase in 7 years, and the increased rent that you see here is driven by exactly what we talked about. So high occupancy levels, and given the relatively few options for tenants, it gives landlords leeway to raise rents, and tenants have few opportunities for somewhere else to go since there's limited new housing coming on the market. Pennsylvania only added 3% to its housing stock in the prior decade, from the 2010 census to the 2020 census. That's unusually low. And so the US added more than that, most states added more than that, and with only 3% being added to the housing stock in that decade, then we see this dynamic where there's increasing pressure on each home because more people are seeking it out. Since remember, household size is declining at the same time that less housing is coming into the market. So if we were doing this 6 or 7 years ago, I would have said to you, analysts are very confident that when there's more supply in the market, that we see affordability improve because people have options and we don't see so much competition for the same home. But we don't really have the data yet to show that when a zoning reform happens, then more housing supply comes on and affordability improves. Luckily, this is 2024 and the jury's back. And we've got a lot of jurisdictions that went ahead and made a major change. And there was a supply response, more housing came online, and affordability improved. So here's what it looks like in Minneapolis, Minnesota, New Rochelle, New York, Portland, Oregon, Tysons, Virginia, compared with the US overall. And in these 4 jurisdictions, we chose them because they're in different parts of the country, but all of them made a major change to their zoning to make it easier to build more homes. Minneapolis and Portland did it in a more dispersed way, where it became easy to build apartments on commercial corridors and near commerce, and they simplified the permitting and they reduced parking minimums, and Minneapolis and Portland started adding a lot more housing. So during this period we looked at, this 5-year stretch, Minneapolis and added 8% to its housing stock, Portland 7%. The US only added 3%. So these are jurisdictions that are adding housing at more than double the rate of the US overall. New Rochelle and Tysons did it differently. They didn't do kind of a widespread rezoning, but they allowed tall buildings near transit stops and in kind of downtown areas. And they got tall buildings that came online. And so you can see all 4 of these jurisdictions added housing at more than double the rate of the US, and they all saw rents grow by less than 1% a year once they did that. Now, incomes are still rising during this time period. So we see affordability improve because we talked about rent as a share of income. And so if incomes keep going up, but we can hold rent growth relatively flat, then affordability improves. The share of your paycheck needed to afford rent goes down. And in all 4 of these places, it worked. Now, they added some housing for low and moderate income households too. Some low-income housing tax credit projects, some buildings that were primarily set aside for low and moderate income residents, but the majority of the housing they added was unrestricted. It was market rate. And affordability improved across the board. And we see that in the US is kind of the counterexample, only adding 3% to its housing stock during this time and rents shooting up 30%, where we didn't see these kind of reforms to make it easy to build. All 4 of these jurisdictions added more households than the US overall proportionally during this time period. This is not a lack of demand. That's holding down rent growth because we see demand remaining strong since all of them are adding more households than the US overall during this time period.
So if I could, so what your point about if you just add market rate housing, the rates go down for everyone because I'm assuming the wealthier people still pay the market rate, but that leaves something that they might not have wanted for somebody that doesn't have the means to necessarily rent the new, bells and whistles place. Contrary to that, when you don't do this, the wealthy are the ones that gobble up what's there. You said like bidding wars. You know, they gobble up what's there, and the people that are left with the highest rates trying to compete are the poor. They're paying a much higher percentage of their income then because no one has ever let anything go for less than market rate.
Yeah, that's exactly right. So we see housing shortages lead to rent increases that are proportionately larger in low-income neighborhoods because high-income households can move into moderate-income neighborhoods. Moderate-income households can move into low-income neighborhoods. Low-income households don't have somewhere else to go. So what does this look like if we adjusted for income? The numbers I showed you were nominal, so that's just what happened without adjusting it for income or anything else. So we looking at Midwestern cities. This analysis is from the Financial Times. We look at Midwestern cities here. You can see Minneapolis just built much, much more housing than other Midwestern cities here. So in adjusted for incomes, even though rents remained flat in Minneapolis during this time, adjusted for incomes, they fell. So affordability improved. And you can see in the city that built the least here, Indianapolis, the biggest increase in rents. And so even if you can hold rents flat, we don't need rents to actually decline for affordability to improve if incomes keep rising. Holding rents flat is enough to improve affordability. In 2017, it took 87% of the area median income in Minneapolis to afford the median rent. By 2022, it only took 72% of the area median income to afford the median rent. So rents are staying flat, but incomes keep rising. And if that's a recipe for success, because that means improved affordability, and at the same time, home values in all of the places I showed you, right? Minneapolis, Portland, Tysons, New Rochelle, home values kept rising in those places, but more slowly than the rest of the U.S. So we're not talking about homeowners going underwater, but we're talking about housing costs rising more slowly than incomes. And that's the recipe that we've had historically when living standards rose.
I had a question about the correlation to city growth. I know from Minneapolis and Cincinnati, you also see a moderate increase in new residents of the city. Do you see that those pushes have pushed either local officials, city council, what have you, to push for more housing? In cities like Pittsburgh, where I represent, we have the same issues, but we have a declining population. Have you seen that be the push for more housing in some of these areas?
So in areas that have a declining population or where the population is flat, there still tends to be a need for more housing there because of the demographic trends. And so there's been interest in, again, in kind of keeping housing costs low as a draw to bring people in and to attract companies as well, because we're seeing companies also locate where they can have employees afford to live. And we are seeing companies leave high-cost areas. And so that's part of the driver, too, I think, for city councils.
Yeah, I think it's more, the question more is the rate of new build. So like you said, Pittsburgh desperately, and speaking from my own experience, but Pittsburgh desperately needs more housing, even though we have a declining population. But do you see the rate of new build being faster in some of these cities, obviously, that have a growing and anticipated growth of their city?
Yes, the rate of new building is faster in places that are growing because there's more interest from builders in being in an area where there's increasing demand for housing, but we still see that even in places that are where the population is not growing, there's appetite for building, and the question is really how difficult is it to build the new housing? Because when rents are not rising, it has to be relatively easy for builders to build for the market to be attractive. To build in San Francisco, builders are willing to jump through a lot of hoops. But in Minneapolis, part of why they've been able to keep attracting new construction is because they've made it so much easier to build.
Yeah, Representative Rader, and then Representative Probst.
I have a question. I think as we're talking more about zoning, but I look at it as a policy issue. I think with higher inflation, with higher mortgage rates, you're not going to get people to move. You're not going to get more available housing. We have a housing shortage in Monroe County. I'm concerned about that. And it's for low-income people that already live there. My concern is we had a lot of people that weren't happy with where they lived in New York and New Jersey move into our area and create more of a housing crunch. I think it's not just local zoning. It's try and expand the water system to accommodate for expanded housing. Try and expand sewage and get central sewage. That's an issue too. So I think there's state regulations that impact what you can do locally and what townships can do, and there are national things that are happening, such as inflation, that are driving it also. So I think it's a larger picture than just focusing on townships and zoning. I like local control. I want the local people to decide their issues. My concern with low-income housing is I want to take care of the people who need it in my district, and there are many who do. When we build the low-income housing, and I ask everyone who's for that, can you make sure that the low-income people who already live in my district get it, and our resources from the county and the local level aren't strained more? And the answer always is no. And I'm concerned that more people will move in from New York and New Jersey and create a worse problem than we already have. So I like the local control. I want the townships to decide how they want to develop their township. They have to do it correctly. But I don't want Harrisburg or Washington stepping in and telling them what to do. And unfortunately, I think in some of the things you're talking about, they would have to do that. So that's a concern of mine. I think we could alleviate some of these problems on the state level with maybe less restrictions when permitting, making it easier for central water, central sewage. On a national level, if we kind of try to lower inflation, try to lower mortgage rates, that would help. So I think there are a lot of things that each set of government could do. We're focusing on one part of it right now, and I'm a little concerned locally about taking local control away and not providing for the low-income housing for the people who already live in my district, not really helping them, just changing the dynamics and making it a larger problem. So do you have any answers to any of that, of my rant?
Sure. So I think in the slide where we looked at those 4 jurisdictions, right, Minneapolis, New Rochelle, Tysons, Portland, I think there's an expectation that there would have been a big influx of residents from surrounding areas into those jurisdictions. Not so much. We see that at the same time that those jurisdictions were making those changes and holding rent growth down, it didn't affect regional housing affordability. We didn't see a big movement into those jurisdictions. Jurisdictions are sticky. People stay for their kids' school districts. They stay because it's the town where they've lived a long time. I think we see a little bit less mobility than I would have expected from surrounding jurisdictions into places that enact reforms to allow more housing. Infrastructure costs are definitely part of what's of interest here. It's just a lot less costly per mile to serve per person when people live in proximity to the places they go every day, puts less strain on roads when people have shorter commutes. And all of this is tougher in places with well and septic, no doubt about it. This is much easier in places that have water and sewer, but the issues like with stormwater runoff, for example, are primarily driven by just that, stormwater runoff rather than household usage. Some of what is helpful here is that appliances have just gotten so much more efficient in the past few decades that with respect to electrical demand or water usage, we're not seeing infrastructure strain as jurisdictions that are already water sewer have been adding more residents.
Thank you. Thanks for your testimony today. And being in Monroe County, I also represent Monroe County and Southern Pike. So I have a couple questions versus statements, okay? I think that every single representative here today has a different story about their own municipality because we all have different needs. My 189th district has the longest commutes in the nation. You can Google it. So 62% of my residents, the kids are on free and reduced lunch. Their parents are going to New York and New Jersey to earn a living to put food on the table. So being from the Poconos, and by the way, born in 1971, I had to move 11 times because rents were going up. You know, my mom was a single mom. So it's nothing new to the Poconos. And she always needed sidewalks so that we could get to places. So it was always in the borough of East Stroudsburg. But my point is during this time, developers came in and put up 3,000 houses, 5,000 houses, and all these developments with one road going in and out. And it was just, honestly, it didn't, we have housing, but then we didn't have the roads to support it. And it still is very congested in my area. Second, when you talk about home mortgages, I mean, my first mortgage was 9% and I was doing cartwheels. It was a great number. In the 80s, it was double digits, right? So ebb and flows of the market, it's going to go down. So when you hear these things about the mortgage rates and things, we've seen them high, and we've seen them high in the early 2000s. When the crash happened in the Poconos in 2006, it was predatory lending, statement loans. You didn't have to prove your income. And one of the issues then the Poconos had was a maid in New York, they'd say, well, just say you make this. It's only $50 extra on your mortgage. And it was predatory. And these schemes really killed our areas. And the developers, everyone kind of knew what they were doing. It was called Why Rent, advertised to New York City. Why rent when you can own in the Poconos? And meanwhile, then these poor people lost everything because they were being scammed. So I want to make sure that if there is development, that there's not predatory loans and there's not developers coming in for a quick dollar. It needs to be thought out. There needs to be roads and infrastructure for these programs. And finally, the other thing that I want to talk about is when you look at housing, you need to look at senior housing, because in Monroe County, there is no senior housing, limited. This would open the doors up for the realtors to have houses that were built in the 40s, the 50s, and the 60s, smaller homes, not McMansions, like cardboard McMansions that were put up, over the last 20 years. If we could have viable senior housing for regular seniors, not the rich, not the ultra rich, and not the ultra poor, if we had that available, so thousands of houses would open up. So it is a multi-level problem, from lack of senior housing, affordable senior housing, to lack of infrastructure for the roads for people to be able to get in and out of these communities without going 4 miles, taking 45 minutes. And there's just so much more. So what you're saying, you're comparing these cities and these different locations. Every one of us has a unique situation. And until we can get the developers to come in, do the right thing, do the right infrastructure for these roads to be able to get in and out, and also, more importantly, invest in senior housing, because then you're going to have the housing market open up and be affordable for median average household incomes to be able to come in and buy. So thank you for doing this today. I have an education meeting I have to go to, but I just want to educate everyone in Monroe County. Don't do what they did, because I would like to take an eraser, wipe it off the map, and start over. Be thoughtful when you're doing your planning. And that's it. Thank you.
Thanks. Representative Sappy?
Thank you so much. This is really interesting, and it's so, I think it's important to every single one of us here. I think we all agree that there's a lack of affordable housing in Pennsylvania. I think we're talking about it in a vacuum, though. I have a child in Omaha. I have a child in the Tysons, Virginia area, and I can tell you, I'm looking at these numbers and I'm scratching my head. It's not affordable. And the ancillary costs of quote-unquote affordable housing, as my colleagues have pointed out, are really significant. My child in Northern Virginia spends most of his commute sitting in traffic. And I mean, it's an extremely congested area, and it's not affordable for somebody who is 2 years out of college. But that's where the job is, and he's making it work. The one out in Omaha is surprisingly cool, by the way. But I want these kids to come and work and live in Pennsylvania. So if we develop, I'm thinking about the southeastern part of the state where I represent, the last amount of land that is available are farms. And we got to think about, the potential for food deserts when we start gobbling up all this farmland for quote unquote affordable or not affordable housing. It's not affordable. And then the cost of putting in the water infrastructure. We're dealing with, as a lot of us know right now, water rates and sewer rates going up like 300% because they're being privatized. So you know, all of this by way of saying, is there a way to rehab existing housing stock, to make it more affordable? We have a lot of boroughs and townships with current stock, and we never talk about that. And maybe that's because that's not a viable option. But I think if we're talking about affordable housing, we need to factor in quality of life and the sustainability of that affordability. Like, how long is it affordable for before all those other costs come in?
Thank you for your testimony. It was most interesting. It strikes me that a lot of what we need to start looking at more intensely is the application of zoning. And I'd like you to try to speak to that, if you will. We continue to operate on a model of zoning, particularly in our suburbs, that harkens back to the Levittown era. Single-family homes, big lots, both of which are rather expensive to obtain. Do you have any suggestions on ways in which zoning can be applied to make it more conducive for more affordable housing?
Sure, I think it's a terrific question, and it's a question that hearing from state lawmakers, and a decade ago, this probably would have come mostly from local lawmakers, but definitely coming from state lawmakers now as well. And so we see that the types of changes being made, sometimes at the local level, but increasingly at the state level, are reforms to make it easier to build certain types of houses. So we'll get to this a bit later, but we've seen 9 states legalize accessory dwelling units at the state level. And that is so that if a home is a single family home, but could be a duplex, it can have an accessory apartment in the basement, in the garage, in the backyard. We see states that are increasingly legalizing 2 to 4 unit homes on each lot at the state level. States like Montana, states like Vermont, states like Washington, states like Oregon, and they are allowing multiple homes per lot. And part of it is for the reason you said, that especially if a tear down is going to happen, if a home is becoming dilapidated, in single family zoned areas, it's usually replaced by a McMansion. But there's another way, which is to allow, say, a duplex or a fourplex on the lot. And that way, a builder is selling to 2 families or to 4 families, and each of them pays less than they would for a single family home. But the builder can make it work because they're selling to multiple households or they're renting to multiple households. And we're seeing states debate other changes. Parking minimums have been a major driver of housing costs, especially because we're seeing less interest in living further out. And so sometimes households may get by where a couple shares a car rather than each having their own, if they're living in a city or they're living near transit in a suburb. And so that's the kind of the changes that we're increasingly seeing. And also another big one is in the 4 places I showed you, what all of them essentially did is they allowed apartments near commerce. And that was the big change. We've seen Florida, Montana, and California recently pass laws to allow multifamily housing on all commercial zoned land in cities and sometimes in towns as well. So if you can build an office building, you can build an apartment building. If it's zoned commercial, you can have multifamily housing there too.
Sure, yes.
Dominate the conversation, but just as a follow-up, I find this very fascinating. So in essence, we need to have our zoning become more flexible. We need to allow for mixed use on a greater level and tie that mixed use into certain infrastructure items that make it feasible. For instance, the apartment dwellings you mentioned in Oregon, they're on transit lines. Therefore, it makes it far more feasible to be able to have an apartment, not have to worry about parking, know that the mass transit will address a lot of those transportation needs. Is there a need to weave in a community zoning with other considerations, such as transit or such as existing infrastructure or potential infrastructure? Something along the lines of the concurrency doctrine that was adopted in Florida.
So I think it's a great question. And we're seeing places, though, that when Florida and Montana don't have a lot of public transit, and so we're seeing their commerce-oriented development where people can live closer to the places they go every day. And so near grocery stores, near pharmacies, near schools. And that enables shorter commutes, and it reduces infrastructure costs. Minneapolis's population has grown by 11% since 2010. Vehicle miles traveled in the city has declined, even while the population has increased, because the new housing is near the places people go every day. They have some public transit there for certainly, but primarily what's going on is that people can live places where they drive shorter distances or they have other ways to get around. And and part of what they're looking to do is also reduce infrastructure costs by not needing to push water, sewer, electrical lines further out, where the cost per resident is much higher, to go further and using existing infrastructure and building on it.
And not to dominate, but just one follow-up question. And imagine with that too, if you push for greater mixed use of structures, a commercial entity on the first floor, apartments above, you make that more feasible as well. And in doing so, you probably also make the risk entailed for the developer a lot less, because he's part of the commercial market, he's also part of the residential market, and he can spread his risk around by having that kind of mixed use building in his being applied to the location.
Absolutely. And having more customers nearby and more potential employees nearby helps the businesses. So part of this is being done as a Main Street revitalization effort. And as we see increasing share of commerce being conducted online, this is a way to keep stores occupied, to keep retail locations occupied, because the closer people live to them, the more likely they are to go to them.
So it's really more of a traditional neighborhood development model, really, that we're talking about.
That's right. That's right.
Thank you.
I wanted to follow up on this notion of housing close to commerce. And, you know, I always say post World War II, all the GIs came home and they wanted to move off the farm and go into the city because that's where all the jobs were. Fast forward 75 years, all the jobs moved out of the city, and we're still trying to put workforce housing in the city so that people can now commute out to the suburbs to get to their job. About 30 years ago, we were able to keep one of the few remaining manufacturers in the city of Lancaster by saying to them, I think most of your people will need to buy a car if you move to a location outside of town. And they surveyed their workers. 90% of their workers walked to work. They were one-car families. One person made it to work in 5 minutes. The other person had a car if they needed to go someplace else. If they didn't, it sat in front of their 15-foot wide house because you could fit one car in front of it. Now you move their job out into the suburbs. Now I need 2 cars. I only have space for one in front of my house. I need to commute or take a bus, and so now you've added a half an hour to 45 minutes to an hour to my commute in and out, and I have to own 2 cars. The cost of me being an employee just went up immeasurably. And so did any of those, and we have incentives to help businesses locate in business parks and things like that, but we don't have the concurrent stipulation that says, oh, and by the way, we'll give you that incentive if you make sure that there's housing built close to it. Did any of those locations that you talked about that allowed for the housing development in commercial areas also give incentives to make sure that the housing was located close to those work centers?
So Florida has some tax abatements that are in place for those developments, and the part of what's going on though is that where work centers are, frequently there's not much housing nearby, and sometimes it's not allowed. So simply allowing the housing near work centers made all the difference.
Okay. All right. So yeah, we don't even have to incentivize it. We just need to allow it. It's okay.
That's right. And whether we're talking about senior housing before or talking about low-income housing tax credit projects, talking about student dorms, all of this is at its core multifamily housing. But multifamily housing can't be built in most places because it hasn't been allowed.
We interrupted you with a lot of questions. I don't know whether you still have more to go here, so I'll let you continue.
I do, but I'll move a little faster. So within New York, we looked at the places that had the slowest rent growth. They were White Plains and New Rochelle. Those were the places that built the most housing. They added 11% to their housing stock over this 5-year period, and they had the slowest rent growth in the state. The places that had the fastest rent growth, Suffolk County, that's Eastern Long Island, Monroe County, Greater Rochester, they had the fastest rent growth in the state. Looked at how much housing they added. They had an average of 1% total over this 5-year period. it was it's very striking that the places with the slowest rent growth, even though there was strong demand to live there, were just the places that added the most housing. And the converse was also true.
We have one more quick question from Representative Powell.
Thank you. Apologies for keeping jumping in. I do have to jump to another meeting, but I wanted to make sure to ask you, if possible, one thing that we haven't talked about that's critically important to, I would say, our district in the 21st, but also across the Commonwealth, is affordable home ownership. We talk a lot about rental, which is deeply important, but in order for people to gain generational wealth, to invest in their neighborhoods, home ownership, attainable home ownership is critically important. What are some other states that are doing this really well and breaking some of the challenges that we know developers in particular face building affordable homes that people at low and median incomes can attain?
So we've seen two kind of models emerge this year, and Maine passed a law to allow manufactured housing, factory-built housing, on any lot where site-built housing is allowed. And that can make homeownership cost much less, because homes built in factories cost less than homes built on site, even though they've increasingly become very good quality. And the new models coming out in 2024 are mostly net zero ready. That means if they add solar to the roof, energy usage is totally covered, because they're built in the factory tight envelope and energy efficient. Another is a bill that was introduced in Arizona and had bipartisan support and did pass both chambers. Won't say what happened next when I got to the governor's desk. And that was to reduce the minimum lot sizes in cities throughout the state. When Houston reduced their minimum lot size from 5,000 square feet to 1,400 square feet, 80,000 townhouses emerged over the next 25 years. And those cost about 40% less than single-family detached houses. So they reinvented the starter home. But it was lot size minimums that were holding back starter homes coming online, because you can't really build a townhouse on a 5,000 square foot lot. Once you were allowed to build on a 1,400 square foot lot, 30 homes per acre, they get 80,000 townhouses. And those were affordable to middle income households. As of 2020, median valuation for those was $340,000, which in the fourth biggest city in the US that's adding jobs and adding population is less than anything else that was coming online. Single family detached built the same time period was $545,000. A huge price difference. A family needed to earn 105% of the family area median income to afford one of those townhouses, which were 2,500 square feet, 3 or 4 levels, but it was the lot size minimum reduction that enabled them and led those 80,000 townhouses to come online. So we haven't talked about homelessness yet. We'll talk about it briefly, and wanted to flag, so using Pennsylvania data, that we see that 84% of people going through homelessness in Pennsylvania, this is for less than 1 year. So something that is relatively short term. And in the HUD count that was published in December, you see the numbers on the slide, 12,556 people in Pennsylvania identified as homeless, about 5/6 going through relatively short-term homelessness, less than 1 year, 1/6 going through chronic homelessness, more than 1 year. So this is really about inflows and outflows more than about one static group of people. So what's driving homelessness? We've talked a little bit about Houston and Minneapolis so far. They both saw homelessness drop over the most recent 5-year period. Why? Houston added 8.9% to its housing stock during this time period. Minneapolis added 11.9% to its housing stock during this time period. This is a lot more than typical cities. They both held rent growth low. This was for Arizona. Phoenix and Tucson added much less housing than Houston and Minneapolis during this time period, even though they had an influx of residents, many of them from California, priced out by the restrictive zoning, and lack of housing there. Rent growth skyrocketed. In Phoenix and Tucson, homelessness did in tandem. We see that housing costs, both prices, whether expressed as price or price to income ratio, and rent to income ratio, are by far the strongest predictor of homelessness in a city, region, or state. In Minneapolis, because of the changes we've discussed, they, over the most recent 5-year period, they produced housing at triple the rate of the rest of Minnesota, adding 12% to their housing stock while Minnesota added 4%. They held down rent growth while rents rose in the rest of Minnesota. Homelessness dropped in Minneapolis at the same time it was rising in the rest of Minnesota because they got housing costs under control with more supply, and that led homelessness to drop. So looking at Dallas and Houston side by side, rents in Dallas used to be a little bit lower than Houston, but they've gotten higher than Houston now. And homelessness has been going up in Dallas at the same time it's been dropping in Houston. So what's going on? Why are rents moving this way in two big cities in the same state that are both adding jobs and similar in a lot of ways? We can go to the next slide. And Houston, we discussed, loosened up their land use rules. They reduced parking requirements, street frontage requirements, but most importantly, minimum lot size. And so they've been adding housing at a much faster rate than Dallas, building almost 50% more per year, per capita, than Dallas has. So if Dallas had been building at the same rate as Houston, they'd have 19,000 more homes. This explains why rents are rising quickly in Dallas at the same time that they are remaining affordable in Houston, and why we see homelessness rising in Dallas at the same time it's dropping in Houston, even though in a lot of ways these places are similar. So we've discussed very briefly the Houston minimum lot size reform, that they dropped their minimum lot size from 5,000 square feet to 1,400 square feet, and that enabled townhouses and increased homeownership. So of the 4 biggest cities in the US, Houston is by far the most affordable. What's going on? They're adding housing. From 2000 to 2021, they added 33% to their housing stock. LA, New York, Chicago did not. They added an average of about 14% during that time period, so consistently adding under 1% per year to their housing stock. No surprise, these places have gotten very expensive. And as the 4 biggest cities in the US, Houston easily could have gone in this direction too and seen affordability get worse as their population has grown sharply, as they become the 4th biggest city. That hasn't happened because they've kept building housing. And when they kind of sprawled out pretty far, and people would have had really long commutes, if they sprawled out further, they allowed infill. And they've made it easy to build in the central city, in part by enabling townhouses there, by cutting lot size minimums.
In line with that too, I know the traditional thinking used to be that you needed restrictive zoning to maintain property value. But obviously, in Houston's case, that didn't affect property value.
Right. Home values have continued to increase in Houston, but like the places we discussed before, like New Rochelle, like Minneapolis, we're seeing home values continue to rise, but more slowly than the rest of the country. Mm-hmm. And if they're rising slower than incomes, then that's when we see living standards rise.
And did Houston also take into consideration other transportation options when it dropped its lot size requirement, as far as bus routes and mass transit?
Houston is
a car town, yeah.
That's a car town. Yeah. Yeah.
Just wondered if they moved in that direction too. Thank you.
So we've talked mostly about locality so far, but we're seeing state policymakers engage on housing, taking steps at the state level, recognizing that the housing shortage is a matter of statewide concern, and that even though we're seeing particular localities make changes to allow more homes, and that's where a lot of our evidence base comes from, to solve a regional housing problem, it's taking state action. And so we can see states taking steps like allowing accessory dwelling units on lots that allow single-family homes, legalizing small multifamily, typically 2 to 4 units, sometimes 2 to 6, like in Washington, on lots that were previously single-family, especially in cities, legalizing multifamily in commercial areas, as we discussed with Florida, California, Montana, streamlining permit approval processes. We're seeing this in lots of states now, either where there's a shot clock, so jurisdictions have a limited amount of time to approve a permit, or there's some remedy for the builder, like being able to engage a third party to approve their permit for them if the jurisdiction doesn't act on it in some period of time, which, depending on the state, is typically ranged from 14 days to 60 days. Also seeing building code reforms to allow more homes, coming at the state level, whether we've seen 4 states pass bills recently to study allowing 1 staircase instead of mandating 2 for 4 to 6-story buildings. We've seen states increase their use of manufactured housing, make it easier to build manufactured housing and site it, and also limiting parking mandates, such as a jurisdiction can only require 1 parking spot per apartment, because we're often seeing parking built in excess, more than there's demand for, and that drives up the cost of housing.
Also, zoning codes sometimes artificially require a set number of parking spaces based on the floor footage. It has nothing to do with the use or the potential for a lot of traffic, but it's just an artificial ingredient to say, okay, you've got X amount of square footage, you need X amount of parking spaces.
Yes, that's one common way to do it, and that's true for both commercial and residential.
Yeah.
So we see, it seems like what and part of what motivated St. Paul to eliminate parking minimums recently was when they realized that if someone's going to open a bar in St. Paul, they have to dedicate more space to parking than to the bar itself, to off-street parking. And that was not something that they wanted to incentivize, and I think that kind of example crystallized the issue there.
We had a restaurant that opened up, and under the existing zoning in the city of Easton, they needed to have 10 off-site parking spots. They couldn't meet it, but it was going to be a new restaurant, it was going to employ people, it was going to be a good anchor for that neighborhood. So they had to rent 10 spots from the American Legion halfway down the alleyway in the back. No one used them. They parked on the street.
Yeah, absolutely. And the most important ingredient to some of the successful reforms has been reducing or eliminating parking minimums.
Definitely.
Bar is a classic example of where I want people to ride share there and not drive there anyway. So
that makes sense. Part of what's motivating the trend toward accessory dwelling units is that they tend to rent for less than other types of housing, because they're in a basement or above a garage or replacing a garage or in a backyard, but they cost less to build than other types of housing, because the owner already owns the land, there's already infrastructure in place. Typically the ADU either is using the same infrastructure as the house, or they can hook up to it. And so we're seeing a lot of interest in accessory dwelling units, including 9 states that have legalized accessory dwelling units on all or nearly all single-family lots, and also permitting get fast. So Los Angeles is doing 1-day permitting for accessory dwelling units. If you pick a model that's pre-approved, San Jose is doing 1-hour permitting because they're trying to one-up Los Angeles. For accessory dwelling units, if you pick a model that's pre-approved, and these can be built either on-site or in factories, and that creates some flexibility.
Representative James?
Thank you, Mr. Chairman. Thank you for your testimony. It is very interesting. Circling back to the beginning of your talk, you referred to construction costs going up, and that's kind of a given, I think. What does Pew Research say are the top 3 drivers of the increase in construction costs?
So increase in construction costs, I think, are different for single-family and multifamily housing. And I should note that we'll talk about manufactured housing briefly, but we haven't seen the same increase in construction costs for manufactured housing. Some of them are fixed. Lumber, right? Like lumber got more expensive, construction got more expensive. I think some of the difficulty has been maintaining a workforce because of the boom and bust cycle, which is in part driven by interest rates. And so we see that counter-cyclical measures, low-income housing tax credit program, for example, where there's kind of funding available even when interest rates get high, is that you can maintain a constant workforce. And that the workforce shortage in construction, in part driven by cyclicality, is definitely a big contributor to the increase in construction costs. We see places that are making a dent in construction costs. Some of it is through factory-built housing. Some of it is just simply through shortening permitting timelines to create some predictability in the process. And also, if more land is zoned for multifamily housing, for example, then that can reduce construction costs for multifamily housing, because it creates a lot of cost certainty in the process. And whether if it's for affordable housing, that can simplify how difficult it is to line up your capital stack. And that can be true for market rate housing too, but shortening timelines can be a cost savings, even while some of the costs are tough to get down, such as fixed inputs such as lumber. So small multifamily consistently has the lowest rents. And we can see this over long periods of time, but 2 to 4 unit housing and small buildings under 20 units, they consistently have lower rents than either high-rise buildings of 20 plus units or single family housing. But they're often restricted by local zoning, and that's part of what seems to be motivating lawmakers in states that are passing laws to make it easier to build, especially 2 to 4 unit housing, so that if a house is going to be a tear down, that the replacement is a duplex or a fourplex instead of a larger and more expensive single family house. But naturally occurring rents for what's often called missing middle housing of the small multifamily are just consistently lower, and we've seen that over very long periods of time in available federal data. So I mentioned building code reforms. I'll just touch on them briefly. North Carolina passed a bill last year to allow 3 and 4 unit housing to be built under its residential code instead of its multifamily code. And that is a significant savings for builders. And Washington passed a study bill to look at adding 3 to 6 unit housing to its residential code instead of its multifamily code, with the goal of cutting construction costs. And I mentioned 4 states that have passed bills to require a study to look at the feasibility of allowing 1 staircase instead of 2 for 4 to 6 story housing, because that enables small apartment buildings, especially above stores and on small lots where you can't fit a second staircase, and could open up some small multifamily, especially in like Main Street type neighborhoods.
Does that usually accompanied by sprinkler requirements or not?
Yes, they would absolutely have sprinkler requirements. And Seattle's had this since 1977. They require pressurized stairs too, so that you've got a fan system to blow smoke out of a staircase. And a lot of these, this element of 2 staircases is from when stairs were sometimes still built with wood. Obviously, that's not the case anymore. We use inflammable materials and fire-rated walls because this is multifamily. So you've got sprinklers and fire-rated walls. So, and lastly, legalizing micro units or co-housing. I won't talk about this much today, but office to residential conversions are overall not going that well. The cost per square foot is very, very high, but it seems that micro units or co-housing may work better for dealing with vacant office buildings and converting that to housing. And we've seen Oregon and Washington recently pass laws to allow micro units or co-living in anywhere that multifamily housing is allowed.
There was a very excellent article in the New York Times about a year ago that talked about how older buildings that were pre-World War II lent themselves to adaptive reuse for residential much more than the modern buildings that we've seen from the 70s onward, largely because of the way the floor plan layout and construction, access to windows and natural light and all of that. Has that been your experience as well?
It is. So the pre-war buildings tend to have shallow floor plate, so the depth from the core to the window is shorter,
Right.
and also operable windows, because a lot of that is, right, so it's pre-AC, or so window operability is a big plus along with the shallow floor plate. Those conversions are still expensive.
Yeah.
A lot of what's going on is just moving plumbing and then compliance with the residential code, and putting kitchens and bathrooms in every unit are major cost drivers. But pre-war buildings certainly are more likely to be successful candidates for conversion.
More adaptable.
Exactly, than more recent buildings with a deeper floor plate and inoperable windows.
Thank you.
So I mentioned manufactured housing. Just to note briefly that this was from a study that we commissioned from the Joint Center for Housing Studies at Harvard that came out last year. Cost figures are from 2020, but you can see that for single section and double section homes, the cost of building a home is just still much less for factory built housing. And this is for HUD code housing, so housing that's fully factory built. But even if there's a way to use factory built components for site built housing, that can reduce construction costs too. And there is a trend toward more states allowing factory built housing to be used in more places. Utah adopted a modular building code this session. Maine passed a law this session to allow, as I mentioned, manufactured housing or site built housing can be allowed. And so there is a trend toward enabling more manufactured housing. and that can be a way of reducing construction costs as well.
Just for your information, the Housing and Community Development Committee is going to be looking at tearing apart the manufactured housing laws that currently exist in the state of Pennsylvania and rewriting it, because right now you need to get they all have a VIN number. You have to get them titled through the Department of Transportation. Like the weirdest laws you can ever think of govern manufactured housing in the state of Pennsylvania, and we hope to change that. So,
real estate financing is a big deal because if you can get a mortgage, that makes the financing much less costly than if you're reliant on a home-only loan, and where that doesn't cover the land. And most states require manufactured housing to be titled in a way that you can't get a mortgage for it off the bat. You have to retitle later, which is a cumbersome process, and you already have a higher interest loan.
yeah, I think it's considered chattel. Your house is considered chattel.
That's right. That's right. So to show Seattle and Buffalo, Buffalo has completely eliminated all parking minimums in the city. Seattle eliminated parking minimums in part of the city, and most of the new homes that came online after those reforms took advantage of the new law. And so they would not have been allowed under the previous code because they were required to build parking whether or not there was consumer demand for it. And so that means sometimes buildings can't fit, or they're built to a higher price point, or people are paying for parking spots that they don't want or don't use or can't afford. And that's especially true whether it's a building that is for people, for low-income households who may not own cars, for seniors who are less likely to drive, or for residents who share a car between multiple adults in the household. But we still see that even when parking is optional, that using a market-based system means parking still gets built in most buildings because there is some consumer demand for it, but now it's based on market forces instead of based on the mandates that were set before, which often are from a different time period or were not kind of designed in a scientific way. And so this accommodates a changing population and changing transportation patterns.
If I may, just real quick. How much of a factor, too, in terms of creating a very cohesive neighborhood, that parking be directed towards the interior of blocks as opposed to the exterior, maintaining the walkability of the streets, the streetscape look?
Yeah, so when we don't have surface lots that are often driven by local regs rather than by demand, then that can make a big difference for walkability. And we see that in cities that have eliminated parking minimums, Fayetteville, Arkansas, for example, they eliminated parking minimums in part to revive their main streets because parking minimums were stopping restaurants from opening. And once they had that flexibility, then they saw infill, and then people were more likely to get around in other ways, and there was a desire for walkability, but which was effectively prohibited before by parking mandates that were preventing businesses from clustering in areas that became destinations.
And by clustering, they're able to feed off of their same customer base. That's
right. So see people go from a restaurant to a store without getting in the car in between. Yeah. And so businesses can piggyback off each other.
Thank you.
Let me wrap up. We did a 5,000 person national survey, and part of what we're doing is, look, the U.S. has a housing shortage of 4 to 7 million homes. This is not just a Pennsylvania issue. We're seeing this in lots of cities and states. And so we did a national survey to ask the public about different options for adding more housing. For the most part, the options we tested tended to be quite popular. You can see the 5 tested here all had support over 70%, and that we see the strongest popularity for options that enable apartments, especially near commerce, near jobs, near transit, so that people can live near their destinations. And this may feel like a contrast from some of the feedback we get from local officials. We do see that local officials sometimes have different views than the public overall. And there's a question of kind of whether it's the state or the locality, that if the state's going to be involved. And so there's sometimes a difference of opinion between the public and between local officials around these issues. And also from academic research that's been done previously, we see that people who tend to go to meetings and be vocal about these issues locally have very different views than their communities, and they skew homeowner, and that they part of why we want to do a survey was to do something kind of scientifically valid and use a probability sample nationally, and the results are pretty striking. That most of these reforms tend to be popular, and we can go to the next slide for the other 5 policies we tested. And while there is variability between the policies, for most of them command majority support. 7 of the 10 had support from 70% or more of the public, with very few differences by political party, by urban, suburban, rural, and the idea of having more people in your community and a more vibrant community is appealing to a lot of residents. Palisades Park allows duplexes. New Jersey allows duplexes on every lot in Palisades Park. Their property taxes are 40% lower than surrounding jurisdictions because that keeps their infrastructure costs down. They've got more residents. Their businesses are open because they've got more people nearby, more potential employees nearby. And there's a lot of popularity for models like that among the public overall, even if there's a difference of opinion. And this is not a universal view, but for the most part, because there's a recognition that the availability of housing is tight, so affordability has gotten worse, homelessness is at an all-time high, and there's a desire to fix these problems. That's my email address.
Thanks. We have a few minutes left if members have questions. Representative Miller?
Thank you. And this is more of a comment and question to both the various chairmen. A lot of this conversation here is very interesting and good, but a lot of it hinges on the concept of zoning. I see we have members of the Boroughs Association, PSATs here. Will there be a follow-up hearing to hear their perspective on this issue as well?
Yeah, it's something we can look at doing. I know one of the things that recently I have a proposal to try and get the state planning board to do a model zoning ordinance that would not be mandated for municipalities, but make it available so it's in their toolbox. And that was something that at least the municipalities expressed interest in saying that, we weren't imposing something on them, but we were giving them the ability to do it without a cost associated to them. Because for the 2,500 municipalities in the state of Pennsylvania, if they all go to rewrite that particular type of zoning law change, you got 2,500 different zoning ordinances that are trying to accomplish the same thing, and you have 2,500 different solicitors and 2,500 different people writing those things, and months and, in fact, years of process, whereas if there is a standard one that they can plug in, it happens a lot quicker and it's much less expensive for them.
Yeah, I should note, too, there is a section of the municipality's planning code, Article 7A, which outlines how to basically create a traditional neighborhood development. So even though you would still need the zoning ordinance to be drafted, that gives a good guidance as to what key elements are needed to get a walkable, traditional town kind of neighborhood.
Yeah, I would just add that most, as I understand surveys and that sort of thing, most people are very happy with their local municipality and their officials and the work that they do, and they're very smart people who have done a good job on behalf of the people of the Commonwealth, and I think their testimony would be very helpful in this matter. Thank you.
Thanks. Other members? Wow. Yeah. Well, I want to thank you for this presentation. I think it was very informative in terms of what some of the realities are. I know we heard from some members that said, like, well, that isn't the case because, I know a person that lives there. But what you're looking at, as you point out, is while the costs of housing in some of these places may still be rising, it's not rising as fast as other places and outpacing the income increases. So when you look at the livability or the affordability of a place, or I think there also has to be this, what you said, a rise in the standard of living. We have a tendency to forget about that and just say, is my house worth more than it was before? Well, if my house is worth more than it was before, but I can't afford to live in that town anymore, it's not really doing much for my standard of living. And so I really think that's an interesting concept to sort of place in this as to how we get to that point where developers and homeowners and everybody can say, I at least have a solid investment here, but it may not make me 27% return in 1 year, but boy, is my lifestyle much better than it was before. Whereas otherwise, a couple years from now, I'm moving out of town anyway, so who cares? So I think it created a lot of stability. The other factor is, you pointed out, it's really hard to grow an economy if the housing isn't there. I think one of the things we face, I know when the governor in his budget spoke about the fact that right now 1 in 4 Pennsylvanians is a senior citizen, and in 10 years that number is expected to be 1 in 3. If we want to grow an economy, we have to attract young families here, and in order to attract young families here, you have to make sure there's housing. We're getting anecdotal evidence from the Pennsylvania Chamber of Commerce that says there are businesses that have jobs available and they can't hire and fill those positions because people, before they take the job, say, let me see if I can find housing, and the nearest housing they can find is an hour from where that job is being offered, and they turn down the job because they don't want to have the hour commute back and forth 2 ways. They don't want a 10-hour workday instead of an 8-hour workday. And so it really is critical, I think, for this state, if we want to prosper, to make sure that there is an abundance of housing and a little bit oversupply rather than the huge shortage that we have right now. So one final question for you, and maybe you can get us a statistic. We've been bandering about as to what the actual shortage of housing is in the state of Pennsylvania. The realtors say it's about 95 to 100,000 units. And I believe that's based on ones that they traditionally sell. We believe that when you then get into these units that they don't traditionally sell, which is the low mod income, in addition to, and any of the homeless housing that needs to get done in the state of Pennsylvania, that really the number is closer to like 235,000 units short in the state of Pennsylvania. If you can quantify that for us at any point in time, that'd be great, because when you start talking those numbers, even at 100,000, and you say, gee, the average home in Pennsylvania is going to cost you, $350,000. I got a $35 billion problem. When it's $235,000, I got an $80 billion problem. We have a tendency not to. We tend to. Oh yeah, we're going to give $100 million to this year. $100 million toward a $35 billion problem is barely a drop in the bucket, And so we've got to figure out how to make sure that this becomes a bigger priority for the state of Pennsylvania if we expect to survive and have an economy that thrives. Any information you can continue to provide us, we'd love it.
Okay, terrific. The lower estimates are usually derived from the Freddie Mac housing shortage, and higher numbers are usually derived from a different estimate, either the National Association of Realtors or the Joint Economic Committee. So most housing economists think that the higher numbers are probably more accurate, given dynamic demand, and also given demographic trends towards smaller households. But at a minimum, the lower number, which is usually derived from Freddie Mac, is still quite large.
Yeah. Okay. All right. Thank you.
Thank you.
We are now adjourned.